Thank God it's Friday. So it's our last day for the 2 weeks, and I'm sure you all be looking forward to waking up later and take a break from very early starts. Okay, so today is Friday, the 6th of May, and as usual, we'll start with the economic calendar. We've got, we're looking obviously for reports of high importance that could affect the market we're looking at, which is the Euro-US dollar. We've got here the Canadian unemployment rate, but you know, we're not trading the Canadian dollar, so that won't really have an impact on us. Obviously, if you're trading the Canadian dollar, you have to be aware of that. Then we've got the big one. The big one, the US non-farm payrolls. The unemployment rate is due out at 12:30 GMT time, which is 1:30 UK time. So I sent you all out a webinar invitation. We're going to meet at, so again, there will be no meeting at 12, but there will be no meeting at 12. We'll meet at 1:20, so we'll meet 10 minutes before the report comes out at 1:30. So there will be no meeting at 12 o'clock. So we're not meeting at 12. We'll meet at 1:20, 10 minutes before the report comes out at 1:30. Now, this is a very, very huge report. It's a report that always comes out on the first Friday of every month. So it's, you know, the whole world knows about this report coming out. The whole world comes to a standstill. It doesn't matter whether you're trading commodities, stocks, foreign exchange, whatever market you're trading, this report has a huge impact on it. And everyone in the whole world is watching that report. And I say it comes out as standard on the first Friday of every month. So first Friday of every month, 1:30, you know, U.S. unemployment figure comes out, and it affects all markets, all markets. So again, you find that there's a high probability the markets are going to trend sideways prior to this report coming out, because it's huge. It doesn't matter whether you're in Japan, China, Germany, US, UK, whether you're trading commodities, gold, whatever you're trading, this is going to have a huge impact on that report. So you find that most markets tend to trend sideways prior to this report coming out, and it's due at 1:30. So remember, that's the standard time. First Friday of every month, the U.S. non-farm payroll comes out. It's called non-farm payroll because obviously there's a huge farming community in America. So they're looking at the payrolls excluding the farming community in America. So they're looking at the payrolls of people, which gives them sort of an idea of what the unemployment rate is. Huge report that you can't ignore. Okay, so with that in mind, we'll go to our charts. As usual, we'll start with the one-year daily chart. And you can see yesterday, there was a huge fall in the market yesterday, but it's still trending above the moving average 50. So it could still go back up, like we said last night. Again, you never put the market in a box. The market will do what the market is going to do. So that might be a huge fall yesterday, but it could just, well, shoot back up today. Because it hasn't broken the moving average 50 yet. It's still trending above the moving average 50. Come in. Oh, morning, sir. Sorry, so it's still trading above the moving average 50. So it's still, for all intents and purposes, an uptrending market. So from a swing trading point of view, you can either sell just below the moving average 50, or you sell at the Fibonacci retracement. Now let's come to the day trading. Oh, before I move to the day trading, go back to the one-year daily chart. I just wanted to show you the MACD. You can see the MACD here. You know, I could say it's a momentum indicator, so you can see where the market was going up. The bars were going up. Now you can see where the bars start getting smaller and smaller. That means this uptrend was losing momentum. And then you can see here where you get the red bars, it means that, it's beginning to fall. But again, you could find that even this fall could begin to lose momentum, and that could start getting smaller and smaller. But we'll see. So I just wanted to show you again the market there. But let's go to the 2 days, 5 minutes. Now, there's another thing I want to highlight to you, especially for those who are new to the trading. We've spoken about the importance of not trending in a sideways trend and trying to avoid times when the market tends to trend sideways. Because like we said, the market can only go 3 ways. It can either go up, down, or sideways. If the market goes up, you want to buy. If it goes down, you want to sell. If it goes sideways, you want to keep house of the market. And, more often than not, you don't know the market is going sideways or until it has gone sideways. But there are some incidents whereby you know that the market has a high probability of going sideways, so you have to try and avoid trading or be very careful trading. You've already seen 2 good examples over the last 2 weeks. Public holidays, you can see the market tends to trend sideways, so you either don't trade during the public holiday or be extremely careful. You've already seen that the market tends to trend sideways prior to reports of high importance. So that's one thing you've seen very clearly over the last 2 weeks. So you know that public holidays, economic reports, you can sort of predict that the market has a high probability of trending sideways. Now, the other thing that can make the market trend sideways is if there's been a huge move in the market. And yes, there's a good example. Usually, again, you don't use the words always or never, but usually, if there's been a huge move in the market tends to trend sideways the following day. I always tell people that you should look at the market like a sprinter or a runner. After you've been running, obviously you have to take a break and catch your breath. And the market too might consolidate, catch its breath. So you find that that's what tends to happen to some traders. They make a huge profit one day, and they lose the money, all the money the next day, because they think that the same thing is going to happen the following day. And then they start over trading, and then they lose all their profits from the previous day. And usually for currency markets, a huge move is, when the market moves about 150 to 200 points. Usually a 60-100 point move in the foreign exchange market is not a huge move. It could be huge for FTSE, for instance. If FTSE moves 60 to 100 points, that's a huge move for FTSE. 60 to 100 points is nothing for Dow Jones. 60 to 100 points is nothing for foreign exchange. But when you start seeing moves of 160, 200 points, and as you can see here, the market, moved from where we entered yesterday to around here. You can see it's moved about 200 odd points, 200 and a bit points. So always remember that. So if you could add it to your trading plan, that the day after a huge move in the market, I have to be extremely careful, because always remember that. Again, I guess that's the beauty of doing these 2-week sessions, because this sort of scenarios come up. Until they come up, you can't discuss them. And then you can see things happen in real time. So that's a very, very important point you should remember. After a huge move in the market, and like I say, huge move for foreign exchange, we're looking at 100 to 200 points plus. After a huge move in the market tends to trend sideways the following day. Okay, so with that in mind, because again, I always say it's all these subtle things that make you a good trader. What some people call the the intricacies of trading. So with that in mind, we know we had a huge move in the market. So this is one major reason that the market was going to tend to trend sideways. Two, we've got the mother of all reports of high importance coming out at 1:30. Again, that's going to make the market go sideways. So we've got two huge reasons why we suspect the market's going to go sideways between now and at least 1:30. So with that in mind, I personally won't be putting or advising you to put a pending order just yet. Because one, because of the huge move in the market yesterday, and two, because of the non-farm payroll report due out. Because you suspect, and again, if you notice, the distance between the pivot point and the first support is huge. It's about 250 points difference between the pivot point and the first support. It's a huge difference because of the huge move yesterday. Remember, the pivot points are calculated from the previous day's trading, and because there was such a huge move, that's why you find the huge gaps between the pivot point. And again, so if you see now, the market is currently at 114,563. So you can imagine if you now place a pending order above the pivot point, the market would have to have moved almost 90 points to get to you. And by the time it gets there, if it does that before the report comes out, there's a high chance it's going to go sideways. And same with the first support. So again, like I said, there's just no point taking any risks this morning, certainly not before the report comes out. Now, at 1:30 when we meet, depending on what the market is doing, if, say, for instance, we meet and we find that, okay, fine, the market is now going sideways, is trading within a narrow range, then we can probably then decide to have one attempt at the market and see if we can then catch a move then. But like I said, at this point in time, because of the huge report coming out at 1:30 and the previous day's huge moves, I definitely would be extremely cautious and just keep out of the market and wait for 1:30. Okay, so that's a very, very important point I just wanted to raise, and it's very important to remember that. Any questions on that? If you have any questions, do click the hand button or send your question through the question box. Let's see, there's a question here. As daily U.S. crude oil has broken the moving average 50 on 1-year daily, do you think the upward trend is now finished? Let's have a look. There's a huge fall yesterday too in the crude oil. All the commodities markets fell yesterday too. There's a huge fall in the commodities market. Woof! Boy, there you go. So you can see it's crashed through the moving average 50. So yes, you can say that you can comfortably say that moving and the uptrend there has clearly been broken. This is the daily U.S. light crude oil 1-year daily chart, and you can see on so many levels the uptrend has been broken. I mean, one, you can see the previous lows of the market. There was a low there, there was a low there, and there was a low there. So you can see the market has just crashed through all of them. So it's certainly not making higher highs, higher lows anymore. So it's not uptrending. It's definitely not uptrending. So one is not making higher highs, higher lows. In fact, it's broken quite a few of the previous lows, and it's also crashed through the moving average 50. So yes, you can comfortably say that this market is certainly not uptrending anymore. Again, just like we were saying for the euro US dollar, if you were swing trading the crude oil, you could have sold just below the moving average 50. You could have sold there, but if you've missed that, you can sell if it gets to the Fibonacci retracement. But that's from a swing trading point of view. But yes, it's no longer uptrending. Hello, Nike.
Hello, doctor. Good morning.
Good morning.
Yeah, you just answered my question. I said apart from moving average 50, I said the red one. I want to know the name and what is it there for?
Sorry, come again.
I can see moving average 50.
Yes.
Then I see another red one, and you mentioned the name, and I just want to know what is it for?
What is?
The red line.
Oh, the red line. Oh, okay, sorry. Although, I mean, hopefully in the subsequent weeks we'll be talking about moving averages again. I guess that the good thing is that in between the 2 months live trading sessions, we'll be doing the theoretical aspects of trading in terms of looking at all these things in more detail. But yes, this red line is the moving average 30. So the red line, I mean, if you're new to trading, don't let that confuse. If you're new to trading, just stick to the moving average 50. Just stick to one line and keep things simple. So, I mean, that's the one I really look at, is the moving average 50. And that's the one I use to indicate the trend of the market and also to use as a entry strategy in the market. So just stick to the moving average 50. But yes, the moving average 30 I sometimes use, but not as much as I use the moving average 50. But sometimes I use superimpose the moving average 30 on there. Oops. Let me just make it bold. So sometimes I put the moving average 30 there for added information. Again, don't complicate trading, but because sometimes when you see a huge gap between the moving average 30 and the moving average 50, if you see a huge space, it's called the railroad appearance. But you can see that, so you know, some people say if there's a good gap between them, is a good indication that the market is uptrending. So you have this railroad appearance. But you can see obviously it doesn't matter. When the market is going to fall, you just crash through it. And again, you have what we call moving average crossover. So meaning that if this red line, or what they call the faster moving average, crosses above the other one, is an indication to buy. And then if it crosses below, it is an indication to sell. Let's see if there's a, yeah, so if you see here, when it crosses below it, that's an indication to sell. When it crosses above, it's an indication to buy. So sometimes you can use just sort of strategies to help your trading. But I think to start with, if you're new to trading, and like I said, if you haven't heard the webinar on moving averages yet, then it's best to just stick to just using the moving average 50. Because basically the first thing you want to identify as a trader is the trend of the market. And that can easily just help you to identify the trend of the market. And then you just want to trade in the direction of the trend. And again, you can use the moving average 50 as a guide. So I always say you buy above the moving average 50, you sell below it. Is that okay, Nike?
Mm-hmm.
Sorry?
Yeah,
okay,
yeah,
sorry.
Sorry about that. Thank you.
Pleasure. Any other questions or comments before we go through to the option screening? Let's see, make sure there are no questions in the question box. Okay, there are no questions there. Good. So if you have any questions, you can ask them as we go through the option screening. Like I said, we're not, or if you want me to look at any other markets you might be trading or you want us to analyze them, do let me know. But while you're thinking about those questions, we'll go to the option screen. So like I said, we're not placing any trades on the euro-US dollar now. We're not going to meet at 12. Remember, we're not meeting at 12. We're going to meet at 1:20, 10 minutes before the report comes out. Because we're not meeting at 12 because we're not placing any pending orders. We don't want to trade before the report comes out because of those two big reasons I've mentioned earlier. So there's no point meeting at 12 because we're not going to do anything. We're going to keep out of the market till 1:30. So like say you should all have received a webinar invitation for 1:30. So do check your spam emails and your email box. And if you haven't got the invitation, send me an email and I'll resend it. Okay, options. Let's go with options. Let's look for all stocks to put on our watch list. So for that, we go to Market Watch. Go to Markets. Like I said, if you have any questions while we're going through this, just don't hesitate to ask. Options 2 is something that we're going to go through in detail. I'll speak a bit about options today. I'll just highlight a few points about options, but it's a whole topic in itself. And we're going to go through all of this again in detail in subsequent webinars. So we'll go to markets data. We go through options. We've got to stock screening in order to look for stocks to actually put on our watch list to watch and look for options trading opportunities. And the criteria used for picking stocks to put on my watch list, the first criteria is that you want stocks making a new 52-week high. It just shows that there's a lot of interest in that stock. And then if you find stocks making a new 52-week high, you now want to look for stocks that are $50 and above, because stocks that are less than $50, you don't really make a lot of money on them. So I usually look for stocks that are $50 and above, and you find that once, and again for me, once it gets above $300, it becomes too expensive. But between $50 to $300, I know I can make good money on them. So if they've passed us, the stocks that have passed those first two criteria, new 52-week high, $50 and above, you now make sure they're optionable. Because if they're not optionable, there's no point putting them on your watch list, because obviously you're trading options, so you make sure they're optionable. If they're optionable, then you then check the fundamentals on the stock to make sure the earnings per share is 80 plus, relative strength is 90 plus, and industry group strength is A minus or above. And all this just proves that it's a very good stock with lots of interest in them, and they're very solid stocks. So that's the criteria. The ratings you use are the IBD ratings. So we're going to start with the New York Stock Exchange to look for the stocks. Look for stocks making a new 52-week high, because that's what we're looking for. And then we'll click Look Up. And straight away that gives us all the stocks on the New York Stock Exchange that are making a new 52-week high. So we've got that straight away. And the next thing now, we now want stocks that are $50 and above. So you can see that's $52, but that's a fund. Usually ETFs, funds and all that are not rated by IBD. So that's why I don't put them on my, there's no point screening them. Most of them are not optionable anyway. So we'll skip that one. That's $991, so that's too expensive. Like I said, my upper limit is 300, so that's too expensive. Okay, we've got one there, which is $62, so that's FMSPR, which is $62.06. And again, that's a trust. So again, usually trusts, funds, and all that are not usually rated by IBD. So just this one stock that has fulfilled the criteria so far on the New York Stock Exchange. Oops, so we go now to the NASDAQ. Again, 52-week highs. Look up. So again, these are all the stocks on the NASDAQ that are making a new 52-week high, and none of them are above $50. I mean, there are a few stocks today because obviously there was a huge fall in the market yesterday. Okay, so now that we've done that, we'll take the stock we've just had a look at and see if it's optionable. before we check the fundamentals. We'll just make sure it's optionable. Sorry, my computer at work is very slow. Actually, what I might do is just use another browser. Oh, okay. Let's decide to just log in. Sorry, it's been a bit slow. But okay, so to check if it's optionable, we go to quotes. Now we go to options chain. Okay, so we just put the code there, FMSPR. So FMSPR, we'll click view chain. And you can see there are no options listed for this stock. So no point screening any further. So no stocks fulfill the criteria today for adding to our watch list. So we'll now go to the watch list itself and look for any opportunities to trade. Now, when you're trading, you always remember, especially when it involves stocks, you always have to look at the overall market, because usually when the market is bullish and it's going up, when the broad market is going up, when it's going up, you find that it tends to drag most stocks up. Whereas if the broad market is going down, it tends to drag most stocks down. So you find like just like in the recession, when the markets were falling, most stock values were falling. And you find when the market is going up, it drives most values of the market up. So you want to sort of ride the wave of the market. So that's why it's always important to check the trend of the broad market first. And if the broad market is trending up, then you place call options. If the broad market is trending down, you place put options, because you want to be trading in the direction of the broad market so you can, ride the wave of the broad market. It's taking a long time. So that's why you always have to, identify the trend of the broad market. And obviously the broad market we are looking at is the Dow Jones. And you can see this, the Dow Jones. So you can see the broad market is still on the upward trend. During the recession here, like I said, when the broad market was falling, you only placed puts. But you can see since it's been going up, I've only been placing calls. So you always check the trend of the broad market first. Let's try this chart again. So since the trend of the broad market is up, we are looking for call options. And then the criteria to place calls is that you want to be looking at stocks that are trending up in line with the broad market. So you're looking for uptrending stocks. And I use the moving average 30 as also an indicator to indicate that the stock is trending up in the same direction of the broad market. So that's the first thing I look for, to wait for it to, what's all this? Too many security stuff on the computer at work. I might have to try another browser. Okay, I'll just say the criteria to place a call is that you're looking for stocks that are uptrending in direction with the broad market. If they're uptrending, then you want to wait for the market to the stock value to pull back, and an indication of the market pulling back is the Williams percentage are descending to -80 or below. So that indicates the pullback in them going up in value again before you place your call option. And the evidence of that to show that the market is going up is if the Williams, if the market then closes above the moving average 7 happens, that's an indication that the market is going back up. So we're looking for stocks that are uptrending. Next stock, if it's uptrending, you then want to check, is it oversold? If it's not oversold, then you move to the next stock. But if it's oversold, you then want to wait and see if it closes above the moving average 7 within 5 working days. So that's the criteria we're looking for. And then once that happens, once it closes above, remember we keep using end of day data. So that's the beauty of options trading. You make all your decisions at the end of the day. Now, I hope any questions while I'm waiting for this site to behave itself. Hi, Nika, do you have another question or your hand is up from before?
Oh, it is the first one. It was the first one.
Okay. All right then. Now let's try this. Just try the new browser. See if that helps. Maybe it doesn't like the Google Chrome. Let's see if Internet Explorer will be better. It's not wanting to play ball. We might have to have a look at that later. We might look at that at 1:30 and see if I can find out what's wrong with this. Any questions on options on our trading so far? I think this doesn't want to play ball. Hello, Anita.
Options software I downloaded on the platform is in EU. And
Sorry,
I just noticed the Option Express platform.
Yes.
That I downloaded is actually in EU.
Oh yes, it's, EU. Yes. Yeah, because you're based in Britain.
Okay. But I notice yours is in US or .com. Is there any significant difference?
No difference. I think when I opened my Options Express account, it was a long time ago before they had the European division.
Okay.
because at the time I opened it, you more or less had to have it was mainly American based, but they've now branched into Europe. So at the time, and again, obviously then I had a lot of businesses in America then, and my accounts were in America, so everything was done in America. But yeah, it's apart from it just being EU, everything else is exactly the same.
Okay.
So there's no difference with the platform per se itself in terms of the charts, the stocks, the strategy, the funding, the making money, and all that. It's all the same. They're all exactly the same.
Apart from tax impact, right?
No, tax is the same.
Oh, okay.
No, tax is the same. Because, yeah, in fact, that's a big example there. Because, you know, in fact, that is why I always tell people when they worry about IG index and the word spread betting. It's just a way of not paying tax, because that's also a way of government giving you a tax break once you put the word bet. But yes, with Options Express, you pay tax on your profits.
Mm-hmm.
So yes, you will have to, you see at the end of the quarter, or they send you monthly statements, and at the end of the year they will send you like a tax statement,
mm-hmm.
which you can use for filing of your taxes.
Okay.
So yes, you have to pay tax on your millions.
That's okay.
Okay.
Thank you.
Pleasure. Any other questions or comments? Like I said, I don't think the chart is going to come up, so we'll probably just look at the table maybe in the afternoon once I try and look at this, sort this out. Any questions before we go? Like I said, remember, we're not meeting at 12. We're only going to meet at 1:20. Check your emails for your webinar invitations. If you don't see them,